Part of this video is sponsored by Sunflex UK. More on them later on. If you are new to the channel, my name is Neil, and I have been a self-employed architect in the UK since 2009. Regular viewers will know that I specialise in altering and extending private homes. Now, I've made several videos looking at the cost of building house extensions in the UK. It's a topic that I endlessly discuss with my clients. But one thing that we seldom talk about is how they afford to build my designs. Sure, some of them tell me, and a few got an inheritance, sold other properties, or just have a massive pile of cash in the bank, but many of my clients have to get a mortgage to afford work to their home. Because I'm an architect and not a financial advisor, how my clients arrange funding is up to them, but given all the recent turmoil in the UK mortgage market, I thought I'd better learn a bit more about how all this works. So I interviewed a mortgage broker called Pat Cannon. I used information Pat provided to make another video about self-build mortgages, and this is the second video on the topic of borrowing money to build in the UK. Pat isn't paying me to say this, I've known him for years. He even helped me get the mortgage on my own house, as well as helping several of my past clients fund their projects. If you are interested, I posted the full interview with Pat to the Real Life Architect forum, and I've put a link in the description below, along with Pat's contact details if you need some mortgage advice. He's a really nice guy, and he knows his stuff. The original video with Pat is over 20 minutes long, so this is the condensed version. Let's say your home needs some more space. You consult with a friendly local architect who tells you the work will cost far more than your pot of savings, and you need to borrow against your existing house to get the necessary funds. The first thing Pat pointed out is that this can be very tricky if your current mortgage is locked into a fixed rate. Ideally, you want to plan any work to your home well in advance, so if you have a fixed rate mortgage, you should be prepared to wait until it expires before arranging a new, larger mortgage. For any mortgage lender, Pat advised that the two biggest concerns are your income and the loan to value of your existing house. No mortgage provider will let you borrow more than you can repay, and they definitely won't let you borrow more than the value of your existing home. None of this was surprising, but what I didn't realise was that as of October 2022, a couple of lenders in the UK will mortgage your home on the basis of its expected future value after work is complete. These lenders will take into account that if you make your home larger, or modernise it in some way, it is likely to go up in value, so they can lend based on the future price, not just its current price. The few lenders who offer this will insist the work be inspected by a chartered surveyor. Their job is to check that the work to your home has been carried out in accordance with the approved drawings and built to a reasonable standard. So you can't easily change the design once it's been accepted by the lender, and you can't hire a cowboy to build it dirt cheap. If you do, the lender might reassess the overall value of your home and change the terms of your mortgage afterwards. Pat made it clear that the lenders who do this are very cautious about the loan to value. Most mortgage lenders can lend up to 90% of the existing value of a house, subject to certain conditions. But the lenders who base their calculations on the expected future value might not lend as high a percentage of that future value. Like all mortgage lenders, they don't want to risk going into negative equity. If this option appeals to you, please talk to a mortgage broker as early as possible, before you commit to any plans for your house extension. Pat did say that a typical mortgage lender is happy to lend money for any legal purpose. Apparently they always ask what the money is for. So remortgaging to buy a car or go on holiday is fine, as long as your earnings can cover the monthly payments and the loan to value is below the percentage the bank feels comfortable with. Some lenders may still ask for architect's drawings and costings before finalising a mortgage for a house extension. This means the bank might need you to hire a quantity surveyor to prepare a bill of quantities. This document breaks down all the individual elements of a new structure to explain their costs in a way the bank understands, itemising the foundations, walls, roof, floor, windows and doors. On that note, this video is sponsored by Sunflex UK. They manufacture high-quality aluminium windows and doors, and I have used them on several of my own projects. I recently made a video about how they enhanced this house extension which I designed. Sunflex offer a wide variety of windows, side-hung doors, patio and bifold doors, as well as skylights and glass partitions. I believe Sunflex offer a great balance between cost and quality. I've put a link to the video up above and in the description below, so check them out. The last thing Pat and I discussed was subdividing properties and how mortgage lenders can get nervous about granny flats. It's something I've been asked to look at several times. A homeowner has a large garden or a detached garage, and they want to create a separate habitable structure, usually for an elderly family member. This is all fine and not at all complicated. as long as you don't want the structure to have a separate postal address. The planning system will treat this much the same as a house extension. But creating a separate property with its own address and title deeds will be treated by the planners like building a new house. Not an easy thing to do, especially if it's in a built-up area. What I didn't know is that mortgage lenders can have a major say in this as well. They are happy to lend to fund the construction, but even if you are successful in getting planning approval to subdivide your plot and create a separate dwelling, you can't just split your title deeds without the bank's approval. If you call up your lawyer and ask them, they will check your deeds and see there is a loan against the property. This means the house can't be sold or subdivided without the bank's agreement. The bank will look at your proposal to split the plot and realise that if you sell off part of your garden and a granny flat, the overall value of your home will drop. If that drop puts your current mortgage below the loan-to-value rate the bank agreed to, they won't let you split the site and sell off the granny flat. Pat advised the solution to this problem would be to pay off enough of your mortgage that the loan-to-value works for the bank, then sell the granny flat and recoup the money. Pat went on to discuss specialised lending for property development or commercial purposes, but that's a video for another day. If you liked this content, give it a thumbs up and smash the like button. I regularly make videos about the reality of altering and extending private homes in the UK, so if that sounds like your cup of tea, please subscribe to the channel.